9/29/2013. Government shutdown, debt ceiling, you name it, it's upon us. It's upon the bulls, let's say. The Dow Jones Industrial Average had a very good correction that we called for in August, and then we rallied up, slightly made an all time new 52-week high. We talked about where the bull was going to be in short term trouble, and that another correction had to happen from these highs for a new buying opportunity to be created within the Dow 30. And the 10-week moving average, the 20-week moving average is being tested. If we break that moving average, there's going to be more selling. This was the last low from the August selling right here. 4 weeks down, we got 3 weeks up in September. Never seen it like that. 61 years of the last 61, historically 61 years. Listen, the month of September is not a bull month for equities, but in high frequency and artificial markets, they can create these highs. The bull gets in trouble up here. We talked about this over a week ago, why the bull would be in trouble short term. Now, how does the Dow trade out of the Dow 30 stocks? We have earnings season coming upon us outside of the government shutdown. If we get a government shutdown, it's only going to be for a few days. That's the consensus, that is. 1995 and 96 is not the same. Not the same economy, not the same people, not the same tape, none of it. However, what would happen is that if we were to shut the government down for a period of, let's say, 3 weeks, that would be very soft for Q4. Meaning that the GDP could get cut by a point and a half, which would make the economy even weaker than what it currently is. The Obamacare is a disaster. We all know it. Let's not pretend. We know that socialized medicine, what do I mean by that? Okay, socialized benefits in healthcare do not work. It's been proven throughout history. So, the way that the Republicans want it shut down, it's going to cost small businesses a lot of money. I'm not here to go through a lot of that part of it with you. We do that with our MMTs on a group level, but what we're doing is that if we break that, the next support level is going to be down here on the S&P. That's going to be somewhere right around 15,035, 15,000. Let's just call it right there. Okay. What we will be looking for once the government shutdown, if it does happen, is once the uncertainty of all of this comes off, the debt ceiling. Let's not forget about the debt ceiling. That's even bigger than the government shutdown. The government shutdown isn't as big as the government debt ceiling that's going to be coming into play in the second week of October. Let's be mindful of it. So once again, they bucked the trend in September. Red October is coming. The earnings season, equities can be bought at cheaper prices than what they currently were up here. Complacency is at its all-time record highs. We're going to be looking at where that Dow Jones could come down here to the 1500 level, and what kind of bear volatility would give the bull volatility a chance to buy again. Now, 2013 has been a great year for the bulls. It's been one of the best years that the bulls have seen in probably 12 and a half years. The multiple expansion has continued to go higher. 2014 is a whole different game. Let me tell you that right now, Mr. Bull and Mr. Bear. And the thing about it is, from our perspective here, is that we will pick off the leadership that have let's just say the leadership within the broader indexes, that when they hit those lower support levels and they get oversold, that's when the buying opportunity comes into play. They don't come into play in overbought levels. Short-term trading, you can trade anything. But when you're looking at buying something and going 10 days or 30 days on a good hold from oversold back to overbought levels, that's what we're looking for, and that's exactly what we're going to do. We are at critical mass levels on the weekly chart. when you take a look at the Dow Jones monthly chart. And we haven't been wrong about these corrections. We called every one of them. They're right there on the website. Go look, read, watch the videos there. They tell you. We tell you before the fact. 15.7. The 10-month simple moving average at 14.6 on the monthly. The daily, you can clearly see the amount of days from these tops where we called the correction. Right up here again, just like we did here in August. Then they rallied on up. Then it was time a week ago when we updated our MMTs. We update them on a daily level during live market hours, but we do major updates on Sunday about the indexes and whatnot. And we haven't been wrong about it. Now listen, here's 15,000 on the daily. This is where that major support level is, where that horizontal trend line is going straight across. If we break it and we sell down below the 100-day moving average, the yellow line, the pink line there, that's a 20-day simple moving average, and we're testing it right. We're sitting right there. So when we open up tomorrow morning, there's no resolution as of right now. Congress is off today. They got till Monday midnight to come up with a plan. So any of the good downside volatility to support level is where we're looking at getting net long. Let it be known. Once again, we called the tops here. And if you want to get updated about that, then we can only tell you to do the following. Okay? Because after the fact, hey, me telling you we're going to have a correction here, we call it here at the highs. And you can go here on stockmarketfunding.com, do your homework, go take a look at the weekly analysis on the NASDAQ composite, the S&P 500, why we said we were going to have another pullback. It's not a big correction. They're pullbacks within the bull. We have not had a meaningful correction for 2 years. The market is due for it. However, we will be looking at the earnings season that starts October 8th, the debt ceiling, and of course the most current event is the government shutdown, and how to take that volatility and turn it into dollars.